Take a look at the market today. This is silver spot, the daily chart. Now, gold is getting closer to new highs, and silver, of course, is nowhere near new highs. I want you to, if you can, look at it this way. We're in buy season, and the thing you care about the most if you're looking for a short-term pop in silver is you want gold to close above $2,009 futures, $2,009 on November 30th. That will attract even more buying into the market.
According to commodity market experts, the outlook for gold and silver is positive as the U.S. dollar has been losing a sheen on a continuous basis. Amid the buzz of the U.S. Fed interest rate pause and falling U.S. dollar index, gold and silver prices bounced back from lower levels and registered more than a 1% rise in the week gone by. VinceLanci, an expert in precious metals, clearly mentioned silver's upward trend in the short term if gold closes above $2,009 by November 30th. Gold hit a 6-month high on Monday as a softer dollar, and expectations of a pause in the Federal Reserve's monetary tightening helped bullion consolidate above the critical $2,000 an ounce level. Silver jumped 1.3% to a nearly 3-month high at $24.62 per ounce. Regarding silver demand, he observes a shift influenced by rising interest in physical silver, particularly in green sectors. Apart from monetary easing, the transition to green energy and artificial intelligence could be excellent demand stimuli for silver. After all, tech and industrial applications account for more than half of global silver demand. One of the most significant influencers on the silver markets is the increased industrial use and demand for green technologies, particularly the need for silver for solar panel installations and electric cars. Noteworthy also is the fact that silver is used in the latest 5G mobile phone technology. Meanwhile, VinceLanci highlights that the growing global prominence of the yuan diminishes the dollar's influence on silver prices, opening up potential future benefits for silver. ING notes the Chinese yuan's rise in global finance, impacting other currencies but not the dollar, despite China's aim to challenge its dominance. Now, we present the clips of VinceLanci's insights from his recent interview with Wall Street Silver. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I would not be surprised if the gold market continued strongly, but there would be one big dip below 2000. And if gold settles above 2009 at November 30th, I'd expect some big buying to come in silver, believe it or not, because silver will be cheap compared to gold on a monthly close basis, and you will attract buying. Silver demand from traditional sectors is off, and that's in no small part United States. Investors have been dissuaded from putting money into silver and gold over the decades, but that's coming back to bite them in the ass because people are taking physical now. Off-take from green sectors, that would be solar, electric vehicles, and coming soon, hydrogen-based fuel cells. ETF investors still on the sidelines, as I just said, and original format. I think the thing that matters the most, if you're a silver person looking at industrial use, is this concept right here. It's a war, right? There's an industrial application of a metal, in this case, silver. You want to use as little of it as humanly possible. And in order to use as little of it as humanly possible, look for technological ways to have smaller, thinner applications. And that's what they've been trying to do, and they've been doing that with some success. The problem is silver is so important in these applications. If you don't use enough of it, your whole purpose to generate electricity is short-circuited. I can't believe I'm using that phrase, but there you go. So what's happened is, what they figured out is they can use less silver, almost the same productivity. And the result of that is they're going to use more solar panels in each unit. So they're using more silver, but the cost per unit to produce is less. So what you have is a war going on. You want to watch technological efficiency reduces the amount of silver being used. And necessarily, when you reduce the amount of silver being used, you drive the cost of the goods manufactured down, which allows more to be made. The more yuan that are held internationally, the less dollars that are held internationally. And dollar holdings is what keeps the price of silver down in a process called suppression. or repression. I'm not sure what you call it, but it's kind of like this. For every yuan that's printed and put out there, the price of gold goes up, and the price of gold goes up in dollars. The price of silver goes up in dollars. The price of oil goes up in dollars. And it should go down in yuan, even though they're printing more. So that's it. Every time you see a headline that says yuan internationalization, know that's a little thing that's holding silver back, being pulled off of it, like a tether being pulled away. So internationalization of the yuan is good for silver.
VinceLanci also believes that if silver becomes cost-effective in hydrogen fuel cells, it could surpass platinum in usage despite its abundance. The research has shown that silver can be as effective a catalyst in fuel cells as platinum, demonstrating its potential to replace costly platinum while maintaining the performance of the fuel cell. Researchers at SLAC National Accelerator Lab, Stanford, and Toyota are revolutionizing hydrogen fuel cells by substituting costly platinum group metals with more economical silver. Anticipating a shift to silver with the decline of gold arbitrage opportunities, he predicts a market trend driven by continuous demand from China and BRICS nations. Silver, often in gold's shadow, is carving out its niche. According to Metals Focus's weekly update, industrial demand for the white metal is expected to hit an all-time high this year. Let's get back to the interview.
Toyota, admittedly, in private conversations with their investors, has said, you know what, we missed the Tesla EV thing. We admit that. And Toyota's like, Toyota's the most influential, powerful car company in the world, and they missed Tesla. They said, what we're going to do is we're going to focus on hydrogen, right? So hydrogen fuel cells. And there are risks in that, of course, but they're pushing hydrogen fuel cells, which, if successful, would just wipe everything else out. Just wipe it out. It's Toyota, Their success so far has been pretty remarkable. One of the problems is they've been using platinum instead of silver in the fuel cell. You need the cathode. Fuel cells need conductors, right? Okay, so they were using platinum, probably because there's less that they have to use and it's smaller. Silver's better. They want silver, and they're figuring out how to use silver more. And you're seeing the headline here. The U.S. Department of Energy and Toyota are using silver and hydrogen fuel cells. Believe me, this is the type of shit that's going on behind scenes that you're not hearing about silver. Just like in World War II, you didn't hear about how we were using all of our silver to make magnets to create the atom bomb. Silver's just way too important. And this is what's going on. You're going to see, if they can get it at a cost-effective level, enough ratio, you're going to see silver and hydrogen fuel cells, and then forget about it. It's going to be, it'll be more expensive than platinum, easily. Even though there's much more of it than platinum, it'll be more expensive than platinum. And there are a million reasons that you'd fight me back on that. I'll tell you one reason that you may not be aware of. Platinum erodes. You polish platinum, you lose atoms. It's so soft. So keep that in mind. You got to find that platinum and get it back. The SGE COMEX Silver ARB. This is the model for depletion, the path that we're on for silver and gold. The SGE COMEX Silver ARB. Why is, if you agree with me that the U.S. is exporting gold to other countries to close to take an opportunity to arbitrage the Shanghai premium over the COMEX, then you may ask yourself, well, what about silver? Well, the silver arbitrage is bigger. It's $2. That's a lot. That's $100 in gold, on the contract. So why have they not taken advantage of that? And this is what it's all about. It's all about physicality now, folks. You have to ship the gold to Shanghai, and it takes a lot less space to ship that gold. The shipping is less expensive. The work is less expensive, and so they're going to arb the crap out of the Shanghai ARB, as long as there's more demand in China. If there isn't more demand in China, this conversation is moot, right? But as long as there's more demand in China, they will arb $50 out of gold before they'll arb $100 out of silver. Why? Because this much gold, that much silver. That's just how it works, okay? Now, what will make them arb the silver? When the gold arb is gone, the silver arb will remain. And then the silver arb will be arbed, but not at the rate that gold is. It's simply because silver is more volatile. But what you're going to see is what we call a regression to the mean with a drift. which basically means the market's going to do this, but rotate at higher highs and higher lows. And that's what's going to happen. As long as the Chinese and BRICS demand in general remains solid and there is no arbitrage, no one's pulling the silver from the U.S. They already pulled the silver, by the way. That's it. We probably stopped them from doing it. Once the silver's pulled, okay, and we're not going to let them close it out. Well, eventually people wise up. If I want to buy silver, I'm going to buy it on COMEX. If I want to sell silver, I'm going to sell it in Shanghai. And eventually, whoever is playing will do it that way.
The rise of the yuan and advancements in silver's industrial use underscore its evolving significance. VinceLanci foresees silver's affordability, compared to gold on a monthly basis, could attract more buyers, driving up silver prices significantly. Silver reached $24.40 per ounce at the end of July, up 1.7% from the end of 2022. The average price for 2023 is expected to reach $24.60. What developments do you foresee shaping the silver market, and how might these factors influence your investment strategies? Share your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.